All right. What's up, everybody? Hope you're having a great day. It is Friday. It is Fun Friday. It is Freaky Friday. It's Fit Friday. Whatever Friday you want to call it. Hope you guys are having an absolutely amazing day. I'm your host, Chuck Fulkerson. Welcome to the Daily Market Commentary, where we're going to take a look at our futures markets from an educational perspective, looking for both breakouts and reversal trades. And we're going to do this in a way that hopefully is fun. And you guys are talking to me in the chat window. So use your mighty fingers. Say hello. Let me know where you're joining us from this morning as we're about to get rolling. Now, real quick, it's Friday. So we understand that on a Friday, you take additional risk. And the reason you take additional risk is because of gap risk of what can happen over the weekend. So with that gap risk of what can happen over the weekend, please make sure that as you are setting your trades up for the weekend, that you keep that gap risk into account, and you make sure that I'm in a position where I feel safe enough that I'm going to be okay if the markets do gap, right? And we never know when a gap can occur. We've also had a nice little run this week. Are we going to see a pullback on Friday? I think that's something to think about as well. So let's go ahead and get into it real quick. Now, by the way, if you guys want to learn more, go to tradersarmy.com. Where we work with people many times a week and try to give as much help and support as anybody ever needs. I'd love to have you as a member. Use promo code TRADER60 for 60% off your first month. Okay, let's get started in our platform. So we are pulling back pretty hard this morning, down 27 points in the S&P. And so being down 27 points in the S&P, we are coming close to our area of demand. So we're going to spend some time looking at that. So let's see. Raleigh, Louisville, Kansas City, Yorba Linda, ATL, and Thousand Oaks. That's who we've got in this morning. So welcome. Glad to have you all here. Oh, Dallas has joined us. Dallas is in the house. Yorba Linda. I've been to Yorba Linda a number of times, Larry. I've been to Yorba Linda a number of times. Our other senior trader and managing partner lives in Yorba Linda. So, and I'm in Houston, Texas. All right. So the ES, we're pulling back off of this all-time high, and not overly surprised that we're pulling back off of an all-time high. This was our breakout trade that we had talked about earlier this week. We got a nice run up. We said that there was a nice big move. Yeah, interesting breakdown in that. Scotty, were you able to catch that breakdown in the ES? Taking a look off this level here, and this is what we talk about as far as how do I best find the opportunity to trade in a bull market. The way to trade bearish is to take a breakdown. So if you're able to catch some of that, some were able to get that move. The next area of demand that we're coming into, not the Ohio. There's a couple of Londons here in the U.S. and there's a London in London, Ontario. That's even bigger in Canada. Good. Glad you're able to catch that. Catch a nice little wave. It's always good to wake up with a little bit of coin in your pocket. I feel like we've got a demand level here that's a pretty good level. Okay, this is a pretty good, pretty clean area. But what's the downside of this level? Somebody tell me the problem with this level at this exact moment. Because while it's a very good, very clean level, there is a downside to this. Funny, Chris. I'm from New Mexico, but in Houston, so it's just backwards. That's where I was born, was New Mexico. There's a downside to this level, and for those of you that haven't jumped in and answered as of yet, the downside to this level is that. Let me move it over. Is that right there, which is the kiss of death that we're getting above the level, right? It's the kiss of death we're getting above the level. So, Scott, I wouldn't call it counter trend because technically our 4-hour trend is still very much up, right? I've got a higher swing high and higher swing lows. My 4-hour trend hasn't really changed. Matter of fact, if I throw my zigzag indicator on there, we'll see that I haven't put in a lower swing high at all. So I'm not changed my trend. Now, one of the things that I can very clearly see is that we're coming to an area of old resistance which could act as new support. So And that's, I think, why we're stalling at the moment. I think that's why price is stalling as we speak. But that case that kiss of death that's leaving me here is that it doesn't give me a really good opportunity for an upside trade. And so I'm a lot more cautious about the level because of that basing. Matter of fact, looking at it, it's going to kind of scare me off of it completely. Now, doesn't mean that I'm against being long today. However, what I would want to see as we are coming back down into here is probably coming into an area of demand on the 4-hour. So the area of demand on the 4-hour would be this area here, which is a bit lower. Okay, now on the 1-hour, that's not clean. It's not clean at all. It's actually nasty, as they say. So since that level is not a very clean level, but it is my level of demand on the 4-hour chart, that would be where I would anticipate a bounce to come. So I'm going to look for a potential candle-to-candle level somewhere down below here in the 4-hour chart. Now, if you still want to lean on this 1-hour zone, which structurally is a good zone, I'm okay with it as long as you're accepting the fact that you got to pull a little bit of money off the table at about 38.17. Even if you don't pull your money off the table, you got to move your stop to break even. So I'm okay with you getting into that so long as and a confirmation entry might be the way to go, Scott. You could do the confirmation entry on here if you want to. Technically, by the rules, aside from the basing before the level, everything else is great about this trade, right? The level was formed at a good time of the day. Level was formed at a good time of day. We had a strong move away. It's our first time back to the level. It was a former area of resistance. It's still going with the trend direction, so it still scores technically an 8 out of 10. And so you would, based on this basing, you would still be okay doing a confirmation entry to get into that position. Okay? What do you guys think? Any questions on that? Does that make sense? So I think it's still valid. I just think it sets up better on that confirmation style trade at this point. And I'm even okay if you decide to go candle to candle on a 4-hour somewhere down here on some sort of a reversal. But once again, our big picture trend hasn't really changed. Now the NQ, looking at our NQ position, we had that piece where we popped just above the level yesterday. We just poked above it here in the afternoon, and then it just kind of went nowhere, right? We touched it, we poked above it, went nowhere, and then just kind of sold off pretty much the whole evening. So when you think about, we sold off throughout that entire evening, now we've got to look and say, okay, where's the better buy? This one, notice, by the way, that how much stronger the NASDAQ is than the S&P, okay? So this NASDAQ level here is the same time of day that it was formed and created as our S&P level here. But the NASDAQ is still very far away from its area. The S&P is right at it, right? Now, by the way, the Russell has already come below it. We can see that the Russell has already come below that same level, that same area. And so too has the Dow. So with the Dow and the Russell both coming below that area, it definitely gives me a lot more cause for pause on the S&P, and the NASDAQ is way above there. So the NASDAQ is, I would agree with that, Scott. I think that the NASDAQ is setting up for a breakdown. And I think what's really going to tell us if we break down here in the NASDAQ is, does the S&P violate this level? If the S&P violates this level at the same time that this NASDAQ gives me some basing and we break below, then I think you've got room to run down to here. And I wouldn't be surprised to see a bit of a pullback today into this area. Now, I think that this one is really, of all my demand levels that we have, I think this is the best one because it is still supported by the fact that the S&P, the NASDAQ, the Russell, they all had levels at that same time. But it's just, this is our strongest market, and this is the one that if we trade down into would be the best trade. I don't think, knock on wood, I mean, we may have 180 points, from drop that we have in the NASDAQ from here as a, kind of a profit-taking sell-off on a Friday. But if we do get a pullback and it doesn't make it all the way down to there, I think this becomes a really good place to set up as a buy on Sunday night. This is one of the few times why why I think you could put a gap, even if it gaps down on Sunday night into here. I think you might even have a gap fade trade because that demand level could hold. So why is Mama chasing the baby? Is there a bear over there? Well, the Russell definitely coming down a bit more just in the last few days. I think ultimately what we're looking at, Billy, is that the Russell has seen a rotation of assets out of it and back into the things that were a little bit more favorable in the market prior, which is big tech. Big tech has, I guess, been what's been driving us a little bit here the last few days. And that's why the Russell definitely a bit weaker. So if you're looking just in the last few days, the Russell has been the one that's been a bit weaker. Now, over the last month, the Russell's still been the strongest, but just in the last few days, it's been our weaker market. So if you wanted to be, if we do get a little bounce and you wanted to be a bit more aggressive on the short side and we bounce up and you say, well, I think that we got a little shot here. If you want to be a bit more aggressive on the short side, you have this area right here in the Russell that I actually think is pretty clean. This little base drop, which is below this descending triangle pattern. So hopefully everybody sees very clearly this descending triangle pattern. This base drop is the basing after the breakdown from that descending triangle pattern. And then a retest of that would actually be a pretty good little entry. Now, our trend is sideways on here, so it's going to be okay. Prefer bear to boar. Oh. I don't even know what that means exactly, John, but I like it. I might say that today. I may use that to teach my daughter how to speak. So the ES demand level below us here, NQ potential breakdown below here, Russell potential supply area up in here. So there's a lot of different opportunities as far as today goes, but I think that down is probably going to be your better opportunity, just sticking with the predominant trend direction for the intermediate time period, the small time period, right? The momentum today is down. I think that we are on a 4-hour trend still overall in a bullish trend in the S&P, right? We've not changed that. We've not changed it in the NQ. NQ still in a 4-hour bullish trend. We've not changed it in the Dow Jones. Oops. Still a 4-hour, maybe more sideways in the Dow Jones. The Russell's definitely a 4-hour sideways trend. So the Russell and the Dow, I think, are basically 4-hour sideways trend. But the ES and the NASDAQ are still 4-hour uptrends, which is why in the S&P we're looking more at the demand level down here for a chance to get long. The NASDAQ, the only way that we want to go short is on a breakdown. The Russell, because it's in a sideways trend, gives you the opportunity to get short on a rally back up into that zone. All right. So those are our equity market levels for today. And I know I spent a little bit longer on equity markets today than I normally do. Let me go ahead and throw this. Share that grid. That is in the trade worksheet. All right, next, let's go to bonds and currency. Energies and metals. So looking at crude oil. Crude oil yesterday, we talked about the fact that we are kind of in between areas of demand and supply. And so since we're between areas of demand and supply, we didn't determine that there was going to be a good area to buy. And a lot of people said, hey, Chuck, can we take some of these lower demand levels? And my belief was no, because I just didn't feel like any of these lower demand levels were clean enough to get long. And do you see why? Right now, on our 4-hour, we are pulling back a little bit. And I think that we may make it all the way down to 50 here because none of these demand areas are super clean, which means that on a rally, we would have an opportunity to get long. Now, the most obvious one in my mind is right here. And that's formed at a very nice time of the day. We have this bit of basing in here. If I look at this on a 15-minute, we can see that it's this rally-based drop and a little bit of a basing inside of this zone. And on a 1 hour, we've taken the bottom of this lower wick. On the 15, I'm actually this is one of the rare instances where the 15-minute chart actually makes me widen the zone. By going to a smaller time frame, I actually want to widen the zone so that I get the bottom of this green candle's body. So 52.26 by 52.41. But by doing that and widening the zone on a 15-minute chart, I got to make it a 15-minute level, which means that's where the 15-minute 6-candle rule would come into play as well. I think that's your best entry on a short. When I look at longs, let's see. Let's throw our zigzag indicator on here. So we've got lower swing low, lower swing high, and I thought we would. I just wanted to confirm. So lower swing lows, lower swing highs, coming back up here to the this was the breakout trade from a while ago. And how do I know that? Because we still have our line of breakout there, our box for breakout settings. So looking to the left, and I look for where's a quality area of demand, you might see a bounce off of this level and then a move a bit higher. But I think that just gets us right back to our supply zone for a short opportunity. Looking at that on the 1 hour, though, that's not a clean level really at all. It's just not a clean entry point. And so you can take it if you're so inclined. I don't think it's really the best idea. I think that you're really going to be better off just letting this trade go, right? Don't try to take this long. Although there's a long opportunity here to trade back higher if you think that we're going to make it back up to this area of supply. But if you do that, based on the quality of that zone, that would have to be a confirmation trade only. So short rules the day. I got to check this real quick. A rally opportunity to get short, you mean? Yeah, Liz, if I spoke wrong, I apologize. Yeah, we want a rally opportunity in order to get short. That is correct. So I must have spoke wrong because Lord knows I do that a lot. All right. Next, gold. Gold is still between our areas of supply and demand. We didn't have any levels on it yesterday. I don't have a whole lot more today. Although in the overnight, we did put in this little unbalanced wick over wick area here below the pivot. On a 15-minute, we can see that that is a drop-based drop. Technically, the tightest your stop would be about 1862 on here. This is a good fair price value area, acting as prior levels of support over there to the left. And I know many of us have been taught you don't cut through candles. I think it's a good idea as we see all of those areas over here to the left where we could see a reversal. So now, as far as demand goes, this is actually this as opposed to the demand in crude, I think is a strong area of demand down below that I do like, but it's got a long way to go in order to get there. And I don't know that we're going to make it back up to our supply area up here as an opportunity to get short. So if you get the opportunity today, you might even get a little retest. If it doesn't make it all the way back up to there, you also have this, which was created for an intraday opportunity as well. And both of those are setups that I think make some good sense. Now, but notice, why are we falling right through? I mean, why are we basically having a parabolic move down? Because we had a parabolic move up, right? So when we look at this move up, how much volume was in there? How much volume of trading was in that parabolic move higher, right? I think that's where you start with the question is how much volume was in that parabolic move higher? And when we think about that, that tells me that it creates what we call clean air or a vacuum and the ability for price to come right back through there, right? If you think about it from a volume perspective, there's just not a lot in there, and that's why we're able to fall straight through it. So I wouldn't be surprised if down below the bottom here we get a little bounce back up to our demand, or up to our supply, excuse me, in order for a chance to get a bit lower. But that's really why we're falling. All right. Next is Nat Gas. So Nat Gas actually just gave us a potential for a breakdown. Now our basing wasn't immediately before the levels, and I wasn't awake to take it, and so many of you probably did not. But if you did take the breakdown, your stop should be at break even at this point, because we've been 6 candles and haven't gone anywhere. It didn't really fit all of our breakdown requirements. The basing was near the level, but not immediately before the level, and there is a significant difference between the two. We do have a supply level that was created here based upon that breakdown with the basing in front of that in front of the level, but it's not a good time of day, and the time of day is going to keep me away from that area. I still think this one here is better. It's also not at a good time of day, but it's got a little stronger move away, and ultimately, I don't know that we're going to make it back up to either one of them. If we fall again, and you could theoretically even take a lower low below the Globex low later today. But I think today we have inventory numbers coming out, so just be aware of the inventory numbers. And then copper yesterday, we spent some time talking about this in the live trade room. So this was a really good setup from a structural standpoint. We talked about the fact that we had a rising wedge pattern. Now, a rising wedge pattern is typically a bearish pattern. And so that bearishness reared its head as we poked below. Now, we didn't get a proper basing here below the level, but what did we get? We got a really nice retest into the level before then getting a very big sell-off. So that one was one that actually performed very much like a technical trade. And now we're coming close to the area of demand. Now, on a 4-hour chart, we're in a sideways price market, and that's been shown to be a place that has been effective in the past. So if you want to take that one again, I think that's actually still a pretty decent level. You may get another opportunity to go short somewhere up in one of these levels here, where we have those long wicks on the 1-hour chart. You might just take the pivot over here on the 15-minute level right there. I think with all this momentum, there's a chance that we break through that 4-hour demand. All right. Yeah, it was basing along that inclined trend line, if you will, and so this is what we talked about yesterday, is the fact that the level that I don't really use the pattern itself, but why do those patterns work? They work if enough people see it and use it. Right? If enough people see it and use it, those patterns gain a lot more validity. And that's what happened on this case. So while I don't get short on the breaking of the trend line, the retest is always an opportunity to get short. All right. Commodities. Looking at our ags, we didn't have a whole lot yesterday that we had drawn on our lines when it came to ags. And not a whole lot today either. Yeah, I mean, and that's really the book that I talk about all the time. I mean, I keep it right next to me. It's like literally the price action breakdown book that I keep next to me. That's got all my highlights and my lines and all the notes I've taken in this thing. So it's a pretty good book if you guys haven't read it. It's called Price Action Breakdown by Laurentu Demir. I don't know Laurentu Demir. Hey, if anybody knows Laurentu, if he'll come speak on our next Trader Summit, I'd be glad to have him. So looking at soybeans, we have a drop base, and then the next move is going to be a drop based upon what our trend is telling us. We have a really nice area of supply right here. I just don't know that we're going to make it back into that area of supply today. Do we have a potential for a breakdown? Right below here, so you could theoretically take this on a breakdown position because, looking below at our opposing demand, none of our opposing demand below the breakdown would be very strong. So I'm okay if you wanted to take this for price coming back down. The correct spelling. I like it, John. Nice. Looking at corn, we made it back to like the halfway point of the big move up, and now it's kind of stalled a bit. I still think that this demand here is okay and that we could even get a candle-to-candle trade somewhere at what is this resistance, which could act as new support. So on the way down, there's a breakdown availability, right? You do have a breakdown availability here below 512, provided that the basing is there. And so I think on the, can you make a little bit of cheddar from 512 to 502? Yeah, there's 10 points there. So long as I only have 2 points or 3 points or 4 points worth of risk, I'm okay with taking a 10-point trade. All right. Wheat. Wheat has come into our confirmation long area. Now, this confirmation long area was identified a long time ago based upon the fact that we had this uptrend. We switched it to confirmation because now all of a sudden we've changed to a downtrend. And so if you want to take the confirmation entry, you technically have an entry right now. But your target, if you take that confirmation entry, your target is right here. So what do you think I'm going to tell you? Don't take the confirmation entry because what it offers you is a 1-to-1 right now. I think it offers you a 1-to-1 at this moment due to the fact that we have basing in front of the level. Had we come into this level with a little bit more strength and our target was up here at this opposing supply, then I'm all for it. But the fact that we had all this basing here in front makes this that much weaker of a level and that much weaker of a trade. Okay, so just make sure, Billy, that you move your stop pretty quickly if you're in this one, and that you take a little, even if you don't take your money off the table at 652 or just below that, you at least move your stop to break even at that point, because that's what the rules are telling us at this point. So we just have to be cautious with it. And sometimes that stinks because sometimes you move your stop to break even, then it comes down and stops you out, and then goes the way you think it's going to go. And c'est la vie, as they say. I don't know who they are, but they say it. Breakout is actually a possibility up in soybean and bean oil. Bean oil has kind of been diverging away from the other, our other three commodity markets. The other three commodity markets kind of have all looked basically the same. Bean oil is kind of the inverse of those. And so with that structure, we're looking to break down on some of these. We may have a breakout up on bean oil. Not enough cheddar. The cheddar's not there. All right. Let me throw a quick share in the trade grid. All right. So, real quick, if you guys wouldn't mind, everybody that's here, I see there's about 45 of you that are watching live. It's a very small room this morning, which is nice. It's quaint. I can talk to all of you if you type in the chat box. Everybody throw a thumbs up if you would, if you don't mind. That would help a lot. Computers like to know that human beings actually give a crap. So hit that little thumbs up icon. That'd mean a lot. And then if you're watching this on recording, make sure that you comment down below, hit the like button, subscribe, all that fun stuff that people say when you watch a YouTube video. Okay. I got to do that because I figure I say that and one person drops off. C'est la vie. Look, it's my life. All right. So looking here at the ZN, we had talked yesterday about about the fact that we had a potential resistance point up here that we bounced off of twice. Now, this 137.02. We've not bounced above there as of yet, and if we go above there now, I don't have the prerequisite basing. Thanks, Dennis. Good man. We don't have the prerequisite basing required in order to get this thing higher. And so without having the proper basing, I couldn't take this position. So where am I going to look? I'm going to look to say, okay, if we base, then I've got a breakout trade. And if we do base, where's my next opposing area of supply? Well, I do have a little area right here. And that little area right here rally, base, and then a drop is definitely a bit of an opposing area that we need to concern ourselves with. But I think you can get I think that can get cut through because this level here is really the origin of the move, and that's simply the retest. And so it makes both of those a bit weaker. So since both of those are a bit weaker, I think you have room to move a bit higher. Scott says, are we Aggies now? Billy says, never Aggies. I am not an Aggie as of yet, but I'm you know, I can be bought, Scott. I can be bought. Although my sister-in-law just bought a bunch of property just outside of Bryan College Station, and so you never know. You never know. I'm not in Texas. You're either an Aggie or a Longhorn. Like that seems what people do. They argue back and forth on whether you're Texas or you're Texas A&M. I don't. I don't really have a dog in the fight to say. I'm gonna go with wherever I go watch a game first. I don't know. All right. So either the 10-year or the 30-year. I don't really have anything in either one of those markets. None of them are clean enough for me to really jump into. Looking at the euro. Now the euro yesterday, we did have a trade into this confirmation level. It almost gave us an entry once and then moved away and then gave you a second opportunity to get in, and we got a really nice move off of that level. So hopefully some of you were able to get this and get a nice move away. Oh, Dennis, that's not a bad idea. I didn't think about Gabe. This was a pretty nice move away. I got a couple of you that made some of those, and so I'm going to remove that level now. That's no longer valid. We are climbing up, but it's a slow climb, right? We're having a slow climb up, and we have this little level up here that on a 15-minute chart we identified as a hidden pivot. I call that a hidden pivot because we have this long lower wick down, and then price rallied back up before then dropping. That long lower wick on that green candle makes this a hidden pivot, and I think that that's still in play. I've had that on there for a while, and I'm going to leave it there. Other than that, there's nothing else I'm going to put on this, okay? Unless you're in Lubbock. See, Chris, I got to tell you, man, I don't get to that side of Texas very often. I haven't. That side of Texas, which people don't. A lot of people, when I lived in Pennsylvania, I didn't realize that the halfway point between where I live in California is still in Texas, and so getting to Lubbock might as well be. You got to take an airplane to get across the state. Now, Canadian dollar. Canadian dollar yesterday, we talked about the fact that we gave it a little poke above, and in the early morning, it gave us a little poke above, but that was really only the second touch, right? So no real breakout opportunity there because that was one touch. On the second touch, without basing, was a poke above. So the level's still good for a breakout trade, and then we just fell apart in the Canadian dollar. Okay. Chris, I've heard that that's a really beautiful canyon. A buddy of mine, my neighbor actually, just went there a couple of weeks ago, and he took some pictures and said I really needed to go see it. It's on our road trip list. So when I look at this now, and I look at where potential areas, looking up, are any of these supply levels that you'd want to lean on? Now, I think, and I could be wrong, I think that a lot of this strong move down in here stemmed from, because remember how closely Canadian dollar is correlated to oil. And I don't know if this is a reaction to the news on the executive order of the Keystone Pipeline. I don't know if that's the case or not, but that's the kind of move that you get when news drives price, right? That's a little bit of a news-driven move. Now, bigger picture, obviously still up. 4-hour trend definitely shown a lot of weakening on the momentum side. Hasn't technically put in a lower low as of yet, but shorts are definitely the way to go at this point with the momentum shifting direction. And when I go to the 15-minute chart, I guess you would say that the best area is this one here, but that's really the only one I have. Everything else is just a slow grind. I say a slow grind down. It's just a quick move down, but not offering a lot of opportunities to get back in. Yeah, Canada is the highest cost crude producer. I do know that. When you look at the cost to produce oil in Canada is higher than anywhere else in the world. That's a big reason why their currency is so heavily tied to it, and it's such a big commodity for them. All right. Now, when we look at those correlations, I think do matter. And I don't know that that's a long-term systemic drop. Yeah, weather is easier in Saudi, and labor costs a lot less. I mean, it's hard work to pull oil out of the ground in Edmonton, Alberta. Like that's that's a different life up there. All right, so looking at our last currency markets here, and I know I'm running a bit long this morning. Hope everybody's still okay with that, although it looks like I've lost a few people jumping off, so we'll have to. We had talked yesterday about a flip level in the New Zealand dollar, and this New Zealand dollar flip level worked out perfectly as we came back down to the area that price was an area of supply, and then old supply acted as new demand. We got a rally off of that level right to the opposing zone for a nice little 3-to-1 profit, and then it started to sell off again. So what's interesting is that now I'm still going to leave this line in place because I think this becomes a line of control where price could trade back into. So if, let's say, we continue to drop, I think that we could rally back up and see a short opportunity right here in the New Zealand dollar. And so this is exactly the way these line of control levels tend to work, as it's been hit on a number of occasions. Let's go take a look real quick at CL, just to because Scott asked if it just created a new zone in which to go short. Yeah, you could say that, Scott. I think that based on the move down, if we rally back up into here, you've got an opportunity to short on a retest back into there. Yeah, Dennis, and I'm not smart enough to know those things. I just know that they may not be as low as they say they are, but they're definitely lower than what we are in the U.S. and lower than what they are in Canada. That's for sure. So, as they say, it's all relative. Great British Pound. So Great British Pound comes into our demand area that we had identified. So the New Zealand dollar worked extremely well off the demand area. Great British Pound, we touched it. Touched it 1, 2, 3, 4, 5, 6 candles later. We had gone nowhere. If you said, well, I'm going to hold on and see what happens, then you've just gotten stopped out. But this is really, this is 1, 2, 3, 4, 5, right at the 6th candle. It was gone nowhere. I will tell you, I wasn't awake to even think about taking the trade in the first place. And so I don't take set it and forget it styles. I want to make those really a, what's the word I want to use? An alert that I'm going to take it when I'm awake and in front of the monitor. In a 4-hour life, we can see that our 4-hour momentum has definitely started to roll over. We're still in an uptrend. Okay, our uptrend hasn't changed. I want to throw the RSI 6040 up here. So notice our RSI is really coming close to that 40, below that 40 range. Hasn't quite gotten there as of yet. And so when I look at my MACD, momentum clearly showing that divergence. This here to this here, although it's not as, frankly, it's not as dramatic as I thought that it might be when looking at the indicator. Remember, MACD is my accelerometer. It just shows me how fast I'm moving, up or down. It doesn't give me whether I'm going to be a buyer, whether I'm going to be a seller. It just shows me the speed of the past moves. It makes no indication as to future. What I have to do is then take that and extrapolate away from there what I think could happen. And so the momentum to this says that we're quite possibly shifting to begin a move down. And we did put in a little bit of we'll call it a tweezer top area right here. So if we come back up and retouch this, I'm okay taking the short on that. I'm even okay taking a limit entry short on that, whereas normally I would just say a confirmation because we're going against the trend. With the weakness of the trend, I'm okay going limit on that. Japanese yen. So looking at the Japanese yen, we had a little demand area in here. We got the kiss of death right here just to tell us why would you be in this trade. And then it broke right through. But that kiss of death before the level then creates a supply area right here. And that supply area, I think, is actually going to be the better setup if price indeed comes back to that region. although our 4-hour trend is up, but once again, like our other currencies, is weakening. And then the Australian dollar. We actually haven't had a trade on the Aussie dollar yet this year. I don't think that we've had a setup on the Aussie yet this year that's been worth taking. Somebody can correct me if I'm wrong, but I genuinely don't feel like we've seen one on here that has been worth looking at. They've all been in between these areas. So I would say you are getting a decent potential now, better than we've had the last few days. This one here, I think, being the best as far as a drop-based drop picture goes. Although you may have something that's right in these wicks right there when I go to a 15-minute. Oh, yeah, that's better. This is actually a better level. This one's a better, cleaner wick over wick zone. Both of them I think are prevalent. Both of them I think are valid. And I see some overall currency weakness. So we're seeing some currency weakness overall in these markets. On the BP tweezer top short, let me go back to that. What I want the current candle to close first. So I'm talking about, I wouldn't take the tweezer top as a short like right now in order to get short at this exact moment. What I would say, Liz, is if we retest back up into this area, then you've got a short opportunity. I feel like the tweezer top we've already missed, unfortunately. If you wanted to take the tweezer top short, technically you would have taken it when we get below here, right? When this red candle closed. At the close of that red candle, we knew we had those tweezer tops. And so with those tweezer tops up there, once you get below the low of that first candle, then you've got an entry. So technically, if you were taking it on the actual tweezer top, your entry is, you're already in the trade and it's already moved about 1-to-1. And you would move your stop down to the top of the red candle once this red candle closes. I'm talking about taking a retest back up into it. Current candle to close before taking entry. I'm okay with the current candle not closing before taking entry because we've already had a move away, right? So we've got a move away that's already been shown. Price already moved down to here. I'm okay if in the next 10 minutes we come up and retest this. Because now I don't do this very often. Let me go to the 15-minute, or let me go to the 5-minute chart. No, I'll do 15 is fine. I don't have to go to the 5. So technically, if you really want to be a little bit safer, you could say it's up here, right? But if I were to take that as a 15-minute level, I'm okay if the hourly chart doesn't close because I've already gotten the move away. And this is sometimes where we get, on a 15-minute chart that 3 or 4 candles and then 1 candle back up and then price moves. And that's going to mean that my hourly level hasn't quite closed. So it gives me, a lot of times I have a problem with these levels because I have what I call recency bias, right? I have recency bias where, that level was just created. But if it's just created, sometimes those are going to be enough to get me back in. Amit, Chuck, posting again. How do you take entry on line of control, market, or do you look for the zone? So you're talking about this New Zealand trade right here? Amit, I will take that just like I would take any other zone. I think that, if I look at this, this would be probably better as a confirmation entry once price, but price has to drop more from here in order for me to really want to use this level again. I'm talking about this as a line of control, which becomes another zone. Now, overnight, it was a limit entry. Not overnight. Yesterday, it was a limit entry with price coming up out of here. Now, there's a fair amount of basing in here, so you might take the confirmation the next time that we come back in. What I would just say is that these lines of control tend to become price magnets. I mean, look how many times we've traded into that level, right? And so if we do move further away, then I think that becomes an area. It's just not there as of yet. So, all right, everybody. Well, I know I went a bit longer today than usual, but we had actually some markets worth talking about today. So I'm going to share this grid and get this out there for anybody out there who wants to check this thing out. And then if you guys have any questions, please feel free to send me an email, shoot up some smoke signals. Remember to go to tradersarmy.com. See if you're interested in becoming a member. We'd love to have you. Our next session will be our Sunday night live trade room. We do a live trade room every Sunday evening, 2 hours in length. So our next Sunday evening, futures is first, followed by stock and options. So we will see you there. Until next time, everybody. Talk to you soon. See ya.